So, welcome back to Pocket Perspectives, everybody. My name is Jack, and as always, we're with Tanisha.
Hi everyone.
So, obviously, if you know a little bit about our company already, you know that we're all about helping our customers manage money and get them the help that they need from the creditors to manage their debt as well. And on this podcast, we just talk about all things money. We talk about our personal experiences. As we say every time, we can't give advice, but we do like to talk about the facts and, as I say, our own personal experiences. So, as we release this episode, it's actually Debt Awareness Week, which is a very important topic, isn't it, T?
Yeah, I'd say that I think debt is again it's a taboo topic, and we don't really touch on things like that
Yeah.
because we're British, and it's something that we've said quite a lot in this podcast. But Debt Awareness Week is pretty much something that is like a week focused on raising awareness, people talking about debt, being open, honest, and obviously no one's expecting everyone to share the intimate details of their finances and their situation. But Debt Awareness Week is kind of just like showcasing that it is okay, it's not shameful, like the best thing you can do is get the help you need, and that's kind of what the week's all about, in hopes that it spreads the awareness and reduces the kind of taboo nature of debt.
Yeah, absolutely. And research does show as well that people are still not asking for help because of whether it's the perceived barriers of debt, like what people think are the barriers of debt, or the actual barriers. So, like you say, it's really important that on a week like this or any time we get people talking about debt as much as they can and get them the help that they need.
Yeah.
Um, so, as I've said, we're by no means experts. We're not qualified to give any advice. However, we do work with a charity called StepChange Debt Charity. And at the start of this season, we promised some really exciting guests. So we thought we would bring on Tom Williams, who is a partnership development coordinator at StepChange Debt Charity.
I think for me, StepChange is like quite a well-known charity. Like I think people think of debt, like StepChange kind of comes to mind, but not a lot of people know actually what they do. So like I'm really excited to get Tom on, and kind of like give a little bit more insights about the different ways to manage debt, because obviously we've spoke about it in the past, like, oh yeah, when people are in debt, like you can do X, Y, and Z, kind of self-manage it. But oftentimes, as we've seen, people sometimes just can't manage it themselves and need that a little bit of extra help. And I think what iHub and StepChange do kind of perfectly fits together, and a lot of similarities between the two companies. So I think we're definitely in for a really good episode and a really nice chat. So yeah.
So if you could just introduce yourself, Tom, tell us a little bit about what StepChange Debt Charity is and how you sort of came to working for them.
Yeah, sure. Well, thanks for having me both as well. Really appreciate you having me
No worries.
on. So, so yeah, I'm Tom. I work in the partnerships development team, as you mentioned, at StepChange. So, StepChange, we help people who are worried about debt by giving them free advice. We offer them debt solutions that can help them write off some or all of what they owe, or they can pay it back in a longer period, for example, in a debt management plan. And I'm sure we'll talk about all that sort of stuff a bit later on. And as for how I got into StepChange, so before I joined, I worked in financial services for a couple of years as a contractor. And it was quite hard work. I mean, as hard work can be in a corporate setting anyway.
Yeah.
Made some great friends. It was really good money. But I just didn't feel very connected to the work I was doing. So I was looking for jobs while I was there, and I wanted to do something that made a real difference for people. And that's because of a real life experience. So when I was growing up, my mum, who's probably to this day the strongest person I've known, she lived with mental health,
Mm-hmm.
and we dealt with all sorts of challenges together as part of that, and sometimes that included financial challenges too. So things like benefit claims, appeals, and she also had some debt from that time as well. So I learned quite a lot from that experience, and with people like my mum, or anyone really who's living with mental health problems, it can be quite a challenging time, and sometimes people need support. They just need someone to kind of guide them through, because
Mm.
we can't all be experts in everything. So it all comes down to different people, different services working together. So she got help from an organisation called Citizens Advice, who I think most people will have heard
Yeah.
of. And I remember helping us to get all the paperwork together, and they were just brilliant. So they got it all sorted. So that had kind of happened. And then when I was looking for jobs, I knew I wanted to do something that helped people, but I wasn't a qualified mental health nurse. I wasn't a psychiatrist. So I had no idea what to do with that life experience until I saw the debt advisor job being advertised as StepChange. So yeah, I jumped at the chance for that because I thought, well, I work in finance, so I could maybe do it.
Yeah.
And yeah, it was great. I just remember speaking to people who were just like my mum, and it was so rewarding to be part of their journey to getting back on track. And so yeah, I've stayed here ever since. Basically, it's a really good place to work.
Yeah, I love that. I think for us, we're kind of in a similar boat that when you're working with a company, especially those helping people who are like kind of maybe a bit vulnerable or have certain things going on with their lives and they just need that little extra bit of help, seeing how like your company and the thing you're working for can impact people, it's just crazy. And obviously it's great to see stats like, oh, this percentage of people have been helped, but especially us, like sometimes we talk directly to customers, like we're getting case studies, things like that, and just hearing from the customer themselves, it just kind of makes your day a little bit brighter, doesn't it? Just knowing like, you know, we've helped that person in a certain way. So completely agree with that. Yeah, love it. So I wondered if, obviously we're going to be releasing this on Debt Awareness Week. I wonder if you could tell us a little bit about that and kind of tie it into, I guess, we started this podcast to open up like just kind of money talks in general. But obviously IE Hub and StepChange help people specifically in debt. So tying that all in together about kind of raising awareness about talking about things, making things less taboo. If you could kind of wrap that up and give us an overview of what it is, that'd be amazing.
Yeah, fab. So Debt Awareness Week is our annual campaign, and the whole point of it is that we raise awareness about debt as a whole, problem debt specifically too, and just the fact that people can get advice, solutions, and that there is help out there which is free, impartial, people don't get judged, and easy to access as well. So that's the whole point of Debt Awareness Week. So first of all, thanks so much for having me on so we can talk about that.
No problem.
Debt in itself. So I think that the reason that we do so much work around raising awareness and campaign work and that sort of thing is because debt gets treated a bit like a dirty word, but the truth is it's just a part of life, really. So you know, people have loans, cards, mortgages, and so on. You know, the only reason that we borrow money is just to help us spread the cost of larger purchases. So there isn't anything wrong with that. There's nothing wrong with having debt or owing money to companies. There's no shame in that at all. And our vision as a charity is a society free from what we call problem debt. And that's what happens when we can't afford to pay the people that we owe. And there's all sorts of reasons why people fall into problem debt, from stuff that you can't control normally, like redundancy, health issues, or just a sudden life shock. You know, it does happen, and there's absolutely no shame in it. So that's what we want to talk about when we do Debt Awareness Week. There's different barriers to people getting advice, and you know, in general, we just want to take that taboo away that you spoke about before and get people talking about money a bit.
Of course. I think as well, a lot of people are actually confused about kind of what debt is, and it is kind of understandable because, like you said, there's problem debt, but then there's debt, and it's like, oh, is all debt bad? And I think a lot of people we speak to, especially the kind of like, oh, I've got a credit card, but I'm keeping up with my payments. Am I in debt? Or I'm falling behind on my energy bills, but they've reduced my payments or put me in a payment plan. Am I in debt? And so I was wondering, we'll touch on like kind of like priority and non-priority and difference between them in a little second, but would you be able to kind of clarify a little bit more of what debt actually is, and is it always a bad thing? Obviously you kind of hinted that it's not, but we're just going a little bit more in depth and that'd be amazing.
Yeah, I think that's a really good point that you've just mentioned there. I remember when I used to work on the phones, you speak to people sometimes who would ask really similar questions to you, like, is that debt or not?
Yeah.
And you think, well, so debt isn't good or bad, it's just owing money, basically. So if you have £100 balance in a credit card, it's £100 debt. It's not good and it's not bad. It's only problem debt if you can't afford to repay it and you don't see how you'll be able to do that. And that's the point where you might need some support from somebody like us. So it's only a problem debt if it's a problem to you. Having debt in itself, there's nothing to feel bad about for that.
Yeah.
Yeah, it's all based on someone's personal situation, isn't it? So it's hard
Yeah.
to put into that barrier. So yeah, so obviously there are different types of debts, and we kind of like to group them in priority and non-priority. Would you be able to kind of run us through the difference, give some examples, and kind of the consequences of not payment on both of them? That'd be great.
Yeah, no problem. So I'll make it as simple as I can. So priority debts and bills are things that can impact your home and your health, cause potentially legal problems, or leads to more debt. So we tend to say these include things like court fines, council tax, utility bills, and your rental or your mortgage, for example. There's more than that, but those are the basics. We also have what we call non-priority debts. So they include things like credit cards and loans. So they have less serious consequences, but lenders can still take further action. So they are still important to deal with. But again, that's where, things like debt advice can help people to understand what's what and then put a plan in place to deal with those.
Perfect.
Yeah. And like you said with the credit card thing, I think a lot of people don't actually know that credit card debt is still a debt. So they don't really understand that there might still be consequences with that if they don't pay that debt back, or the sort of the credit score implications of all that as well. Like there's so much to it that people don't understand. But obviously we've spoken about what all the different types of debt are, but we know that it's really important to manage debt and to manage priority and non-priority debt with different priorities, if that makes sense. So we've previously discussed sort of like the mental health implications of all this, but we wanted to just get your take on if there are any other different consequences of debt when you're not managing it effectively, if that makes sense.
Yeah, you're right, there can be. So it's so it depends on the type of debt. So I guess there's two obvious examples we can look at. So one would be if you look at rent and mortgage, for example, if you don't make the payments and you've got some debt that starts building up, then potentially you could be looking at losing your home. So that's a really serious consequence, and that's why we say that's a priority debt to deal with. Your credit card, on the other hand, they can't just kick you out of your home. Not, they can't do those sort of things. So they can send you letters. Eventually there'll be things that affect your credit file, as you mentioned, Jack, like the account goes into something called a default, and that's the point where they might pass it into a collection company, but they're not bailiffs either. They're just people who will kind of chase you to make a payment. Things like cards and loans, they can take court action, and what we mean by that though is it's not criminal, it's civil action, and they would get something called a county court judgment in place, and that basically just means that there are some other steps they could take to recover the debt, but it takes quite a while for those kind of debts to get there. And normally if you're working with lenders and you're keeping in touch with them, they're less likely to go down the court route as well. So that's the difference between those sort of debts and things like your rent or your mortgage, which will lead to that quite quickly potentially if it's not dealt with.
Yeah. Have you got any sort of specific examples from anybody that you've spoken to, or any people suffering where they've not understood these sorts of consequences and they've come to you for help?
Yeah, well, it can be difficult for people. I think one of the challenges that you'd sometimes hear, or that I used to hear when I spoke to clients, would be if you've got a few different things going on and a few different people asking you to make payments, it's hard to know what to deal with first, I think. So that was a really common thing that came up, and that's why we do the work that we do, I suppose, is to help people just break it all down and make it really simple. Because at first, when you've got letters, phone calls coming from different places, it can get a bit overwhelming, and that's when debt stress can happen, which is basically when people are just worried so much and they're only thinking about their money and they're losing sleep over it and that sort of thing.
Yeah, and like obviously improving your mental health is so important, and managing your debt effectively is a huge benefit of that. But have you got any other particular benefits that you see quite often in terms of when people are managing their debt effectively, like the actual advantages of that and the things that the outcomes of that?
Yeah, definitely. So I think I just mentioned about people losing sleep, didn't I? So people who have money worries, they typically lose 11 nights sleep a year, worrying about how they can manage. So that's a lot, isn't it?
Yeah.
And for people who are living with, perhaps mental health or neurodivergent differences, it can be an especially difficult situation to get through. So sometimes, we'll speak to people who are doing things like avoiding friends and family, and they're finding it hard to focus on work or other things. And it can be hard for people to talk to someone else about debt or know who to talk to. I think for me, the main benefit I used to hear people talk about is that they often told us they had better sleep, or they felt like like a weight had been lifted off their shoulders after they'd got help. So for me, that was a really nice thing to hear.
Yeah, of course. I
Yeah.
think it can affect so many different aspects of your life. Like, we've done so many topics in this podcast so far, but even things like relationships, like it's kind of like a snowball domino effect, isn't it? Of like, you think this one thing is step, but then it trickles into like so many aspects of your life, and we hear it so much. But it's a lot, because I think as well, we've spoken to a lot of customers who they kind of say, I've been robbing Peter to pay Paul. Like, if they're falling behind on one debt, they often like, well, I'll take out a loan to pay that off, or I'll dip into my credit card, and then now you have to pay that back, and it's just a horrible cycle that we see so many people fall in. And I imagine StepChange see a lot of the same kind of situations as well.
Yeah, we do.
Yeah. So in terms of managing debt, previously Jack and I did an episode kind of about self-managing debt, and like if you think you are comfortable and in a position to kind of tackle it yourself, different ways that people normally do it. So we've discussed kind of the snowball and the avalanche methods, and those kind of focus on like interest rates. So I was wondering on your take in particular of like the importance of interest rates when considering like when you're managing your debt, and if you want to do it yourself, and as well as obviously if the priority, non-priority, there's so many things to factor in, but just kind of your take on that would be great.
So I think we approach it from a bit of a different standpoint, because by the time that people come through to us, they're usually in a financial crisis. So that might be where because the advice and support that we give would be a little bit different, I suppose, because the methods that you're talking about are very good for, I think, more preventative ways of people falling into problem debt. So by the time they get to us, sometimes the options are a bit different. So say, for example, people may be paying interest on a credit card. They might have the option, if they look and they shop around a little bit, of switching over to a 0% interest for a fixed period, deciding how much to pay, paying it in that amount of time, so they're not paying any extra. By the time they get through to us, people have normally run out of those sort of options. So I suppose it's a bit different from our side.
Okay, that's fair enough. In terms of how StepChange work, then is the kind of, I know there's so many different options available to help, but is the kind of priorities that, like, from the top of your head, that you'd say in terms of how to manage that, and if someone did want to kind of, they feel like, I can manage it myself, I don't think I need to go down this route, what would be your advice and then the initial steps then in terms of priorities?
Yeah, so if someone feels like they can manage the situation themselves, then I'd say the first step would be, and actually this is handy for people who are not even struggling with their finances, is just to build a budget, really, which is just a list of all the money you have coming in and going out every month, which I know you two will be very aware of in the work that you do,
of course,
as well.
And
just to be realistic with it as well, and make sure that you're accounting for everything that you would spend your money on. So include money for entertainment, for example, include money for an emergency savings fund, that sort of thing, and then see what's left over realistically, because that's the money you'd have to play with towards the debts that you have. And then you can kind of use that to support what you'll do, and then whether it's that maybe you would think about paying some high interest debt first, that sort of thing.
Yeah.
But I'd say that's the essential step for anyone who's thinking about managing the situation themselves. But yeah, if someone's fallen behind, I mean, they can always contact their lenders to make a payment arrangement themselves as well. And if they're backing that up with a copy of a budget they've completed, that will, that'll normally help towards that. But again, I think if someone's got to the point where, they are paying perhaps less than what that lender's asked, they might as well get debt advice, because there's no obligation to go ahead with anything anyway.
Yeah.
And the more you know, the better, I think, with stuff like that.
Definitely. I think it's really interesting the point you made about like kind of the little things, because they do add up, don't they? I think I was completing my IE Hub budget recently, and it asked about like dog food, and I just put in like what my dog food is, and then I did the open banking journey, and it highlighted how much I spend on like treats, which I didn't factor in. I was like, I spend that much every month on dog treats, and it's like you don't think about it if it's like a directly asked, but that's why it's good to kind of go through bank statements and things like that, because there's always going to be things that you forget to include. So I think that's definitely a really good point.
Yeah, my guilty one is takeaway coffees. I'm really bad.
Yeah, I was just going to say the same. Like, you go to Starbucks through the drive-through, you think it's going to be a couple of quid, but it's like £5, isn't it, for a coffee these days from Starbucks?
Yeah, and I did it this morning, I've got to admit. So
yeah.
They just taste different, don't they? My partner got me a coffee machine for Christmas, and so I've been trying to be a little Costa barista myself and do it. Nice. It just doesn't taste the same. It's just not the same.
What's your specialty? Have you got a special drink?
Oh, I'm so basic. I love a caramel latte. So yeah, I'm the classic boring one. yeah, just too much sugar. It's no coffee, just sugar. yeah. I love it. It wakes me up, so it's worth it. So yeah, I definitely agree with you, Tom. And when someone does think, I'm at that stage where I need more help, I can't do it myself, maybe they've got multiple lenders and they just don't know where to go. Obviously there's so many different things out there. There's IE Hub, there's StepChange, there's Citizens Advice, like you mentioned. What would your advice be of someone kind of being in that position and not knowing where to go? What would like the first steps be, do you think?
So the good news is there's loads of help out there. So I think one of the things that we know sadly is that people often wait quite a long time usually before they reach out for help. So I think for us, over half of the clients we asked in some research that we did told us that they waited for over a year. So that's so they knew they were in trouble with their finances, but they waited over a year before contacting us. And in a year, interest and charges can get added on, so debt levels can go up as well. So what I say to anyone who's in trouble is reach out as soon as you can, because you're not under any pressure when you speak to us. It doesn't affect your credit file. Nothing happens. You're just getting advice. We'll give you some options, and you can take them away and think about them. Come back to us in 6 months if you need to. If you manage it yourself in the meantime, and then something happens, it doesn't matter to us too much as long as you are getting the help that you need. And even if you just know it's there to fall back on later, that's absolutely fine. So yeah, that'd be one of my points, is to not hesitate really, because there's no buy-in, there's no nothing happens to your credit file. There's nothing negative about getting debt advice. It's just more information for you. And then the other thing would be that there's just loads of help out there. So for us, we work online and by telephone. There are other debt advice charities out there too, so it's not just us. There's also Citizens Advice, there's Christians Against Poverty, there's the Money Advice Trust, there are local debt advice organizations. So whether it's us or whether it's someone else, there's plenty of people out there who will talk to you, and they just want to help. They're not trying to get anything out of you, so don't be afraid to reach out.
I think a lot of the time there's this almost a shame and a stigma associated with it. Like, people are too embarrassed to ask for help, and that's probably a massive reason why people are going for that full year without asking for any help.
I think that's a really good point, Jack, actually. there is still a bit of stigma and shame attached to having debt and owing money. But it's nothing to be ashamed of, because when people fall into problem debt, it's usually due to something that's been outside of their control. The most common cause that we see, that they are things like redundancy, health issues. You can't plan for things like that. They happen, unfortunately. And the biggest driver last year was the cost of living. So when people came through to us, that they were telling us that was the main reason they were struggling. It was around 20, 26, 25%, something like that. So, a quarter of clients who came through to us last year, that happened to all of us. None of us saw that coming. So there's no shame in it. Things happen.
Yeah, and I think a lot of people don't think they have the time, especially if they've got multiple creditors. They're like, how am I meant to spend 45 minutes on a call with each person that I owe money to and figure out this plan and kind of navigate all these different people wanting things from me? So that's why I love, obviously, like StepChange and iHub have that overlap of kind of condensing it into one often, when it can just get overwhelming and people just don't have the time or even mental energy, like not even like actual physical time. Sometimes it can just be so draining.
Right.
Especially like when you mentioned about mental health, like sometimes that can overwhelm you, can't you? So having that support out there is just really amazing.
And obviously once everybody's exhausted all their options themselves, they've found the advice that they needed. Obviously at StepChange you can actually set up different types of debt payment plans for different people. So we thought it would be great to hear from you a little bit more detail of, once the person's come to you realizing that they need this payment plan, what are the sort of common options that you give for them and the different alternatives that they can set up?
Yeah, really good point, Jack. So it's specific to each person who comes through to us. So I'll give you a general idea of the different kind of outcomes that people might get to, or where they might get to with the advice. So in some cases we give short-term advice. So this might be that someone is in a short-term financial crisis. So it could be that maybe they are out of work at the moment, but they're actively looking for work and they expect to be in work within 3 to 6 months, potentially. So we might just give short-term advice in that time and say, ask your lenders for some support. Normally, if someone mentions they've spoke to us and they quote their StepChange reference number, that unlocks loads of extra support from the people that they owe money to. And that's really important to mention too, is that lenders want to help you. They don't want you to disengage with them. They want to know that first you're okay, but then also, what's kind of happening, and they'll help you too. They will give you a bit of space. They will do other things to support you through that. So a big part of our advice is to maintain contact with your lenders. So in some cases, after we've given short-term advice, people get back on their own feet and they're able to manage the situation themselves, and that's all they need from us. If that's the case, that's fine. But if not, so if they come to the end of that and maybe things have got better but they're still struggling a bit, we can look at longer term solutions for them. So these might be repayment solutions. So an example of that would be, I think I mentioned earlier, a debt management plan. So that's where someone makes a single monthly payment to us, and then we send individual payments to their lenders on their behalf, and we'll ask them to do things like stop the interest, stop the charges, and most of them will agree to that because we've built up a good relationship with the credit industry. For some people, repayment solutions are not appropriate, so it might just be that we don't think that person can pay their debt back in a realistic amount of time. So in those cases, we look at what we call insolvency solutions, and they involve people writing off part or all of the debt they have. And there's a few different insolvency solutions, but the right one will very much depend on that person's individual circumstances. But that's again, that's the benefit of someone getting debt advice, whether it's us or somebody else, is that we're there to figure that out and help you figure that out. You don't need to know the ins and outs of all this sort of stuff. We're there to help you navigate your way through it.
And when I was looking into the different sorts of sort of options that are available for people when they are struggling. I saw that there was quite a few differences between like the England and Scotland, for example. So if we've got any Scottish people listening, is the advice that they would get too different to anyone else, or is it pretty similar?
Yeah, so the slight differences in advice, don't ask me for specifics because I've never done Scottish debt advice, but I know they've got different protections in Scotland, and the debt solutions are slightly different too. But the gist of what I've just said is the same. That they'll have repayment solutions and also solutions that involve writing off part of all of the debt that they have.
Yeah, definitely. And in terms of us at IE Hub, we were set up to help people that are just sort of, like we've said a couple of times, in that overwhelming stage where everything's just getting on top of them. They want to take the first steps to managing their debt. And I think there's a lot of similarities between IE Hub and StepChange in that it's like a really good tool for people that are anxious and overwhelmed and stressed to have somebody else almost take that away from them and do the hard bit of, like you said, dividing the money out to the different creditors, or in our case, like calling those creditors and having different repayment plans set up. So we see a lot of customers that report their anxiety reduces a lot from having us help them out with their managing their money. So do you see a similar sort of pattern at StepChange, like with feedback from different people that you've helped?
Yeah, we do. And I think over last year we were given, I think it's an award of some type, and I think it's FIFO, where it's all based on the actual client reviews that you have, and that kind of showed us as being like a trusted service, if you like, because of the amount of positive reviews we'd had from clients, and we try and share that stuff inside the charity as well, because obviously we've got frontline debt advisors, we've got people who work in our review teams, we've got all the staff who work in our back office teams to make this all happen. So whenever we get a bit of a good news story, and we try and make sure that people know about it, because the work that they do, it does make a big difference. And it's the same with you too, isn't it, with what you do? You know, it helps, and I think knowing that you're doing something that helps people through a difficult time it's really rewarding, isn't it?
Yeah, definitely. And I think a lot of people could be gaining all these benefits of our tools, but they're too scared to sort of reach out and start using them. So do you have any advice for anyone that's got a little bit of sort of hesitation of reaching out and getting the help?
Yeah, I think so. For anyone who's maybe not sure about doing it, to go back to what I touched on earlier, was that there's nothing for you to lose from getting debt advice. So there's no point where your credit rating gets impacted. There are things that later on can do that. If you take up a debt solution, for example, or you do certain types of things that we advise you on, but you would know about that before that happens, and there would be a point where you make that decision yourself. So just getting debt advice and using our online tool, or making a phone call to a helpline, or going to sit with a face-to-face advisor, nothing bad will happen from that conversation. We're just there to help you. It gives you more options. So to anyone who's maybe unsure, I would say just give it a go, because you won't lose anything from it. At worst, you'll just know a bit more than maybe you did before, but other than that, nothing bad will happen.
Yeah, I like that. We wanted to kind of touch on the amount of people like under 25 who are falling into debt. I think a lot of that is about kind of like the lack of financial education, and obviously there are other factors. I mean, me and Jack have spoke on it personally, of like, we kind of left home, went to uni, got this £2,000 overdraft, and I was like, let's go, like, I'm ready to party. And obviously that had a ripple effect, and I found myself graduated but trying to find a job, but instead I had this like £2,000 overdraft having to pay off, and I was just like so overwhelmed with it. So I think a lot of people our age do worry about kind of the impact on their credit score, because obviously debt in general, especially problem debt, like you said, can have a ripple effect. But then I think a lot of them have worries about, oh, if I'm put on like a DMP or an IVA, or a certain solution obviously affects my credit score, maybe I won't be able to buy a house as quick as I could. So what would your advice be to like the younger listeners who are having those concerns?
Yeah, so first of all, that podcast that you just chatted about. I think that's the one that I watched last week before
Right.
we filmed this, and I thought you both did a really great job of just being really open and candid about those experiences, really. And I think there's so much strength in that, and it helps other people so much as well, because I think as a society we're getting better about things like being open about mental health, for example, taking massive steps towards that. I think we're so behind when it comes to money, aren't we? But I think we're getting there. I do think we are. Yeah, slowly but surely. Yeah. So credit scores. So I think the first bit of advice to anyone who has fallen behind, has missed payments, and the credit file's been impacted, maybe they're at the point where they need, or they're already getting debt advice, would be it'll pass all of that. Your credit score, nothing that happens on it is permanent. So I've spoke to people who have been bankrupt in the past, and later on they've managed to get a mortgage. Nothing is impossible when it comes to those sort of things. Things tend to last for 6 years, is usually the amount of time that when something drops onto your credit file, it normally stays on there for about 6 years. That's not to say you won't be able to do anything credit related in those 6 years either. It might just be harder depending on what you've done. So yeah, you can repair it. So that's one thing. Nothing is permanent with your credit file. The second thing is that credit scores, they're a good indicator of financial health, but your lenders don't tend to really use your credit score as the thing they assess. So lenders tend to look more at the contents of your credit file. So it'll be things like your payment history, for example, how much other lending that you've got, that sort of thing. That's a much bigger factor for them than your credit score. So if your score's a bit lower than you'd like it to be, again, don't worry too much, because that's not the big part of your credit file, really. But we all think it is.
Yeah, I do.
That's the mad thing. And last would be that at the end of the day, your happiness and your health is so much more important than your credit file or your credit score.
Yeah.
I think, like you said, with the not understanding what the credit score means, when I took the finance out on my car and then I wanted to go and rent a house, I was thinking, oh my God, I'm never going to get this rent. I'm going to have to keep going backwards and forwards trying to find somewhere to live. But they looked at it and it was absolutely fine. Like, I didn't know what I was worrying about. But if I'd have just known, if I'd have understood that, I could have saved myself so much stress. And that's what I think why it's so important to just be able to understand these things and just feel almost a little bit more educated. So that's why we do these podcasts, just so we can tell people all the things we've learned the hard way.
I was the same as you, Jack. I remember when I think when I was younger, I hadn't taken out much credit. So I think when I looked at my credit file, because I wanted to take out, my first credit card or whatever it was at the time, credit score obviously wasn't very good, because it's based on how much lending that you do as well. So I was looking at it thinking, oh, it's rubbish. This is so rubbish. But I wasn't, I hadn't missed any payments to anything. Nothing untoward happened. So I think you're right. We put so much emphasis on that credit score instead of actually what's happened on our credit file. But again, my point to all that is, even if things have happened to your credit file, don't worry about it too much. It'll come and go.
There's a friend of mine, and she actually has a StepChange DMP, and I was talking to her about, obviously, in prep for this this podcast, just to kind of get a little bit more information about it. And she was saying that she went to rent a place, and they were like, oh, we do like a credit search to check, obviously, if everything's okay, kind of similar to what you were saying, Jack. And she was like, I'm on this DMP, I'm not going to be able to get this place to rent. But she was had absolutely no issues with it, because it didn't come down to missed payment, because obviously StepChange had communicated with the lenders, and she was obviously keeping on top of her payments by paying her DMP, and she had absolutely no issues. And obviously that's not saying that like that's the case for everyone, but you'd be surprised like the things that you can still get even if you're on certain plans. So yeah, I like it.
That's great to hear.
Yeah, definitely. We wanted to kind of go on to now just kind of like a Q&A section. So we got some questions in from some listeners. So I wonder if you don't mind answering some of these, Tom. Not only 3, so it won't take too long. So the first one, someone asked, why do I get asked to come back in and refresh my INE? So I assume this is a IE Hub user, and reshare with my creditors. So I know that StepChange do a similar thing where obviously you want to update your budget if things change, and also like I assume every couple of months, similar to IE Hub. But I think people are kind of getting worried, like, why is this happening? So I wonder if you could shed some light on that.
Yeah, no problem. So I think from our side, it could be someone that maybe we're supporting with a debt management plan, for example, because we review those plans at least once a year to make sure that it's still the right solution for that person, because things can change too. And also, if you're on a repayment solution and you're paying so much per month, there are changes that happen every year. Inflation, for example, council tax nudging up, your rent might go up, those sort of things. So it's to make sure that we can account for those things, and we do that at least once every year. But we also say to everyone that if anything else changes, just let us know. We don't need to wait for that point to do a review. So yeah, reviewing things on a regular basis is actually quite a smart thing to do as well. So yeah, I'd say for us, just keep us in the loop, because anything that happens for you financially, we can factor it into the advice and support that we give as well.
Yeah, and it gets the best outcome for them, doesn't it? If you know exactly what's going on. Another person said that their friend is struggling with their debts, but they don't seem to want to actually reach out and get the help. So is there anything that they can do for their friend to try and get them the help, or is it something that they have to sort of come to that decision themselves and get the help?
That's a nice one, because I think, first of all, I think it's great that this person wants to support their friend as well, because I think lots of us will watch this happen to people that we care about in our lifetime at some point. And I think, like we've touched on, there is still a bit of social stigma around debt as well, and it is still scary for people to talk about, but we can we can help the people around us, I think, just by being a listening ear, actually. So you can bring it up casually, because money worries are normal and actually very, very common. So you two have spoke, haven't you, on your podcast about things that you've experienced. I've experienced my own money concerns before. Nearly everyone that I know has had some sort of money issue at some point. So I think sometimes sharing a little bit can be a good way to introduce the conversation, while not being pushy, obviously. So I think sometimes the best thing we can do is just let people know, if they do start talking about this sort of thing, that we're not judging them. Obviously, if you can, I'd say to drop in, it doesn't need to be StepChange, just the fact that there are debt charities out there who can help, and hopefully they'll find their way to that in their own time. So yeah, I think the main thing is not to be pushy, but just maybe introduce the conversation and drop it in casually and let them come to it themselves.
100%. I think so many people, and you'd be surprised how many people are actually struggling. They just put on like a happy face and don't want to talk about it. So opening up the conversation, I think, is really handy. Final one from the listeners. They said, I'm too scared to phone my creditors and tell them about my other debts and how I need a payment plan, because I'm worried they may not care that I have other debts and will only care about their own debts, which I think is really interesting. So do you have any insight on that, Tom?
So most lenders, first of all, is that the credit industry as a whole, for anyone listening who doesn't know much about financial services, because if you haven't worked in it, why would you? They all follow the rules that are set by the Financial Conduct Authority. So these make sure that all financial firms kind of behave in ways that lead to what we call good outcomes for people. So that means that lenders will want to help you, and if you let them know that you have money worries, as I've touched on before, that normally unlocks extra support. They want to help you to be able to get back on track, you know. So you might be surprised, and that's something that I'd hear sometimes from clients, is that they were surprised about how helpful their bank was. But they are, you know, the people who work at banks, they're people like us, aren't they? You know, it's
Yeah, normal people.
Exactly, yeah. Many lenders as well, they will refer people on to debt charities like us to make sure that you get the support. So so quite often, the first time that people have heard of StepChange usually is because they've been referred by a creditor. So so you know, that they're not bad guys, that they're not always going to be kind of just hounding you to make a payment really quick. The point about doing it over the phone, though, is that you don't have to do it over the phone if you're not comfortable to. You can write to them, or you can email them instead. And again, that's where kind of getting debt advice can help you with that too, because we can, you know, as well as coming up with a plan or looking at debt solutions, we give all of our clients something called a personal action plan. So that's information that they can send on to their lenders, so that, you know, they might even find it easier to pull the information from that pack, because we normally can give things like template letters as well, which they can send on to their lenders. So I think to anyone who's really worried about speaking to their creditors, my first thing would be, don't be, because they'll probably help you more than you're thinking. And yeah, my second point would be, you know, you can come and chat to someone like us first if you want to as well.
Yeah.
Lovely, thank you. I think we've covered a lot. I think it's been a really informative episode. Is there anything else that you'd like to add, Tom, before we wrap up?
I don't think so. Just yeah, thanks for having me on. It's been great.
It's been great. Well, thank you very much for coming on. I think this is a very much needed episode. I think it encompasses kind of what we do, what StepChange do, and obviously, like I said, there is an overlap, but we love work. Obviously, we have a great relationship with StepChange, and I think both companies just kind of want to do good and help customers who are financially struggling and in those situations. So yeah, I really appreciate you coming on. So yeah, is there any kind of summarize your journey, final words of advice for listeners just before we go?
Oh yeah, final words of advice.
Yeah,
just that if you're struggling, there's no shame in that. Especially with money or with debt, and there's loads of help out there. So again, the point is, obviously I work for StepChange, so I'm going to talk about how, you know, we can help, but we're not the only ones either. You've got Citizens Advice, you've got Money Advice Trust, you've got Christians Against Poverty. Whoever it is, please just reach out for help if you're struggling with money, because there's loads of people out there who will be happy to help you.
Perfect. Thank you very much,
Amazing.
Tom. And yeah, to all listeners, we'll be back in 2 weeks, because we've changed now. We used to do weekly, but we've moved it. So we'll be back soon for another episode. Thank you very much for listening, and we will see you soon. Bye.
Thank you. Bye.